Welcome to Conversations, Season 2 of the MTA Podcast Series, a weekly audiocast featuring interviews with leading investment strategists, geopolitical experts, and other key thought leaders, brought to you by the Market Technicians Association, and your host, Ed Carlson.
Tuesday, October 26, 2010. This is Conversations, the official MTA podcast series. And today's guest is Charles Rotblut. Charles Rotblut is Vice President of the American Association of Individual Investors. He is the editor of the AAII Journal. He authors a weekly AAII Investor Update e-newsletter, and his commentary is published on both Seeking Alpha and Forbes.com. Charles' first book, Better Good Than Lucky, is expected to be published later this year. He has analyzed both publicly traded and privately held companies. Charles' experience includes working for Zacks Investment Research, Invest Tools, Curian Capital, a money management firm, and McClure, Schumacher & Associates, a business valuation firm. Charles is a graduate of the University of Kansas, where he earned a bachelor's degree in journalism. He is a holder of the right to use the Chartered Financial Analyst designation. Charles Rotblut, welcome to the program.
Thank you for having me.
Well, thank you for taking the time to join us. So you're a Jayhawk, huh? I did some time in Lawrence, Kansas, the William Allen White School of Journalism. I understand that's the school to attend if you're interested in journalism.
Yeah, it's a pretty good program there. I can't say so much for our football team this year. Hopefully our basketball team will be good, but
they're always good. They dominate.
Yes.
Yeah. How'd you end up at KU?
I actually grew up on the East Coast, and I think I was a little bit of a rebellious teenager and wanted to get away from home. And Kansas had a really good journalism program, right. And I've always liked writing, so it just seemed like it was a good fit.
Okay, all right. Today, Charles, we want to get an in-depth look at the AA sentiment survey, but before we get even to there, why don't you give us an introduction to the American Association of Individual Investors?
Sure. We're a nonprofit organization focused on investor education and research. We've been around since the 1980s. We actually have a membership of 150,000 members. And really our goal is to really provide unbiased information and education. We're not trying to predict where the market's going or telling people, what the next hot asset's going to be. We're just really trying to provide people unbiased information about how do you construct a portfolio, what factors you need to consider when you're analyzing an investment opportunity. So we're really stepping back and just trying to help people out and point them in the right direction.
Well, you say you're trying to provide unbiased information in how to construct a portfolio. Isn't that almost, by definition, contain some sort of bias, whether it's efficient market hypothesis or market timing or what have you?
A little bit. And we really steer people towards a lot of academic literature, and we really focus on the basics, on being allocated. And really paying attention to your allocations and your risk levels. And a lot of people assume that buy and hold means buy and forget, when reality is if you're properly managing your allocations, you're actually adjusting your portfolio as the market moves. Even if you're a long-term investor, you don't want to do it too often, but when you're seeing one asset class get really too high, you want to cut back on it. And it's not that different from technical analysis, where if you see a stock being really overbought, you need to realize, my risk levels are elevated here, and maybe I need to think about when I'm going to take some profit and, look for a stock that maybe isn't so overbought. So, the concepts aren't that far different. It really comes down to really application and what time horizon an investor's thinking about.
Mm-hmm. So sort of a dynamic asset allocation?
Absolutely.
Oh, interesting.
I always like to remind people that buy and hold does not mean buy and forget.
Yeah. I think most of the adherents of buy and hold could probably use to hear that reminder once in a while. All right, Charles, there are all sorts of sentiment indicators that are used by technicians, put-call ratios, mutual fund cash flow. You have some competitors, Investors Intelligence Survey, Consensus Inc., Market Vein, et cetera, et cetera, et cetera. Now, you manage what is quite possibly the most popular sentiment survey in use by market participants today, the AA Sentiment Survey. And that's what we want to take a look at today. To get us started, why don't you give us some deep background on the survey, such as when did it start, how is it constructed, what's the purpose of keeping the survey? I mean, something tells me it wasn't originally meant to be the contrary indicator that Wall Street uses it for.
Sure. We actually started the survey in 1987, and it was really just started out to kind of just gauge what our members were thinking. And the question over the entire time has not changed. It simply asks investors whether they think the market's going to be up, down, or about the same over the next 6 months. Up being bullish, flat being neutral, and down being bearish. And it was really just kind of something to kind of gauge the interest of our members. And I think over time it's just really taken a life of its own in terms of followership, in terms of people following it. But we have seen over time where there is it's correlated inversely, whereas if we see bullish sentiment get too high, it's a sign that perhaps the market's ready to turn around and actually pull back, or if bearish sentiment gets too high, we've seen that as an indicator that perhaps people are too pessimistic and we could be looking at a market rebound at some point in the future. The one thing with this survey, as is the case with any single indicator, you always want to look for, agreement among several indicators versus just taking our survey by itself and using that as your sole indicator for making a market call as to what direction stocks are going to go in over the next few months.
Mm-hmm. Okay. You mentioned it's taken on a life of its own as far as the people following it. Can you give us some idea as to what types of investors or market participants do follow it?
Yeah, it continuously amazes me. We have a lot of individuals that look at it. We have some market strategists for some very large sell-side firms following it. Occasionally we'll see an academic study on it. So it seems to be a wide range of investors. And from what I've been able to tell, the array of people following it's probably broader than I realize, and probably more people are tracking it than we even realize or can actually put our fingers on. And I think just because it's been around for so long, and because the question hasn't changed, and also the specific group that we're actually surveying, I think that's given the survey some credibility and really some street cred.
How would you describe the people that you are surveying, and do you have any idea? Well, I'm sure you have an idea. How many people actually participate in the survey?
Sure. The people that take it's actually AAII members, and although the survey results are open for the public to see, to actually take the survey, people do have to be a member of an organization. We are composed of individual investors, as our name suggests. They tend to be older. Our median age is in the 60s, which is actually pretty average when you go across other individual investor organizations, whether they be for-profits or non-profit like us. If you went to Invest Tools, you went to a Weiss Research, the demographics really don't change, and it usually tends to be college-educated, higher net worth individuals that are members and then really subscribe to these type of services. And then in terms of the survey, we usually have a few hundred people taking it every week. It's voluntary, but we do see over time that the results stay pretty consistent. And so we do develop this track record. And although we can't say for sure it's the same people taking it week after week, we do see some similarities in the responses, particularly because we ask a special question after the survey every week, trying to get some more insights to what they're thinking about the markets, how they're reacting to current topics that are in the news, such as what do they think about the elections, and will that have any impact on their investment sentiment, or where they think the market's actually headed over the next 6 months.
Mm-hmm. Okay, we want to stay really focused on the sentiment survey, but I'm going to take an off-ramp here and just real quickly tell us a little bit more about the special question that you ask. What is the purpose of that? How do you develop it? I assume you're the one that writes that. How do you get your ideas for that?
Yeah, I actually started asking just to try and get some more insight, as I said. And usually I'll pay attention to what's going on in the markets. I'll listen to phone calls or letters I'll get back from our members. And and sometimes I'm just kind of looking at seasonal, what's going on right now in the markets. And there's some questions. For instance, this week I'm asking investors what sectors and industries they like, and we can kind of see over time, going back to past periods, has this changed? What are they thinking about? And it's usually, again, just trying to get some insight. Okay, what's kind of driving the sentiment and what's really affecting their attitudes right now? Is it what I assume it is, or is there something else that's going on that maybe beneath the radar that isn't as apparent that's really kind of swaying their sentiment, either to be more positive or more bearish over a given period?
Do you publish those results?
We don't publish the results of special question on our survey. I do send out a press release out to people within media with some of the responses, and it's probably not as scientific as we do with the sentiment survey because it's open-ended questions. So we're kind of going through what people are saying and trying to do our own, my own guess as to what's the consensus here. And sometimes it's pretty obvious, and sometimes we'll see the results really take two polar opposites. So whereas the sentiment survey itself is we do keep exact track of what the results are. With the special question, it's more qualitative, just trying to get more of a sense of what investors' feelings are.
Okay, all right. We're going to continue with Charles Rotblut in a moment, but first a reminder that on next week's program, we'll have as our guest Richard Arms, the creator of the Arms Index. Charles, you mentioned in your answer to my question on the special question that it's not as scientific as this survey. Let's dig into that a little bit deeper, going back to the survey. For example, what sort of sampling problems do you have with the survey? What sort of biases do you have to contend with? Can you give us a little insight into the scientific part of this?
Yeah, the sampling is definitely open to debate because we don't actually take a random sample of our membership where we send them, where we actually call them up and say, what do you think about the markets right now? So if you were to look at, say, a Gallup poll where they actually do take a random sample of the population, we don't have that level of scientific, and so there's certainly you could criticize our survey for doing this because it is voluntary and it is actually online. Also, the base is actually our membership, and by and large, our members tend to think longer term than possibly some other groups. So we do have that bias where it is voluntary. Our organization kind of preaches more of a long-term philosophy towards investing, and so that does affect the results. But our investors, their sentiment gets affected like anybody else, and even if they have a long-term outlook for stocks and a long-term perspective towards investing, their mood still changes the same. And we do see over short periods that whether sentiment's bullish or bearish, it does get affected by how the markets are doing. If stocks are rising, people tend to be more hopeful about the short-term direction of the markets. If stocks are falling, they do tend to be more pessimistic. So it's not a case of where sentiment's necessarily wagging the market or necessarily that market's wagging sentiment, but there's definitely they both definitely weigh in on each other, and you're not going to see investors getting very optimistic if stocks are falling, or conversely see investors get very pessimistic if stocks are rising.
Mm-hmm. All right. Well, you know what? That takes us right to where the rubber meets the road as far as this interview is concerned. I'd like you to talk to us, and I'm sure this is what all our listeners are waiting for. How is the survey correlated with market turnarounds?
When we actually track the results over history, and we really see two trends really develop. One, if the numbers are staying pretty close to the average, really within one standard deviation, and for people who don't understand what standard deviation is, basically if you were to plot all the results on the chart, you'd see the majority of the results being in a pretty tight range close to each other. And in that case, if we look at bullish sentiment, for instance, we really can see about a 10-point range. So the historical average for bullish sentiment is 39%. And this week, when we look at bullish sentiment, it actually came in at about 49%. So although that's 10 points above historical average, if we were to plot all the results on the chart, it's still within that range. What we really look for is extremes in a reading. For example, with bearish sentiment, if we look out 2 standard deviations beyond its historical average of 30%. We're looking at a reading above 50%. And typically when it gets above that level, it usually suggests that maybe the markets have been too oversold, and we're going to see a bounce soon. For example, when we look at March 5th, 2009, which is pretty close to the end of the last bear market, we saw bearish sentiment hit an extreme of 70%. A few days later, the market started to rebound. So we're really looking for those extremes in the sentiment indicator, where really we see bearish sentiment getting too high or bullish sentiment getting too high. The other thing is I also just pay attention to the spread. What is the difference between bullish sentiment and bearish sentiment? And again, we're looking for that extreme where maybe people are too optimistic or they're too pessimistic. And again, it usually is a sign that maybe the markets are too overbought or too oversold, and we could be seeing a turnaround happening pretty soon.
Mm-hmm. Okay. This next question is going to expose my poor math skills, but I think it's important enough that I want to throw it out there. You just told us that you follow, or AAI follows the bull-bear spread, which is the difference, bulls minus bears, and gives us a number. And yet I've noticed that some sell-side firms, instead of following the spread, they take your numbers and develop the ratio. Have you put any thought into what's better? Is it better to follow the spread than the ratio, or vice versa?
You know, I don't think it makes a difference. I think that it's really trying to get the same thing. It really is looking what is the difference between the two. The spread I just like doing because it's very simple. It's very easy. You just, as you said, you take bullish minus bearish, and there's your number. When you start getting the ratios, you start doing a little bit more math, a little bit more division. And I really think it's just, how are you looking at it? Are you trying to come in at one angle or another? But I think at the end of the day, it's still looking what is the proportion of bulls to the proportion of bears, and is one side weighted too heavily over the other. So I don't think it necessarily makes a big difference. I think it's more of a personal comfort level. Just the same, we could show a chart to two investors, both have different way of analyzing the chart, but at the end of the day, they still have the same conclusion about what the chart says about the stock's trend.
Mm-hmm. Okay. Charles, we're coming down to our last few minutes here. And normally in this part of our podcast, when we're speaking with a technical analyst, I can't resist the temptation to ask the guest, what are your views on the market going forward? But of course, that's not your role. But perhaps you could give us a minute or two on what the latest results of the survey.
Sure, absolutely. Our latest results, we actually saw bullish sentiment hit 49.6%.
Ooh.
And which is actually a 5-week high for the survey. And we've actually seen bullish sentiment stay above its historical average of 39% for 7 weeks. So we are seeing individual investors react to the rebound in the markets. Obviously, we've had a nice rebound since September in stocks. But we haven't really seen bullish sentiment get that high. So it stayed consistently above average, but not at levels where it suggests that individual investors are too optimistic. And I've really been describing this as a cautious optimism because we do hear from individual investors that are worried about the economy, they're worried about the federal deficit, and a lot of them are also just worried about yields because it's so hard to find yields. We just had a treasury auction where we had inflation-protected treasuries go with a negative yield. And I think you play all this in there, when someone's looking at the chart, it's important to realize on November 2nd and 3rd, we've got midterm elections with a Fed meeting. And when you look at the market direction, it's hard to say, well, what's the reaction going to be to that and what happens to stocks? So, I do think there's a little bit of a waiting game among everybody, even though, stocks do seem to be holding this upward trend going into the meeting, and people have a general expectation of what they think is going to happen. It's still uncertainty as to whether we'll get what everybody expects in terms of Republicans making big gains in Congress and quantitative easing by the Fed, or if we'll get something that people aren't expecting. We'll have to wait and see.
Right. Okay. You mentioned the election November 2nd, and of course that's a big deal. But there's an even bigger deal coming on November 1st. It's your new book, Better Good Than Lucky, will be released. Why don't you tell us a little bit about your book?
Sure, absolutely. One of the core concepts I get across my books, I pull from a lot of investment literature, and there's a lot of great books that have been written over the year. Philip Fisher, Graham and Dodd, and a lot of people, even though it's out there, they're just not reading it. So I try to take a lot of this well-known investment literature and take the key concepts from them. Valuation matters. The business model matters. The company's financial strength matters, and really kind of explain it in simple terms. And for the technicians out there who think I'm concentrating on fundamental analysis, I actually did do a chapter there on technical analysis. Oh. And I think one of the things that people who use charts when they talk to someone who's very interested in fundamentals is that regardless of what you're looking at the chart, and even if you don't rely on the chart as your sole reason for investing, if you see a big spike in this chart or you see a lot of volatility in a chart, it's a sign to do some research. What's driving the price? Because price action is usually driven by something regards to fundamentals. Either the fundamentals are getting better, there's some news event. So I do encourage people to actually not only look at the fundamentals, but pay attention to the chart and use the chart as a reason to do additional research, and just make sure you're comfortable with the volatility that the chart displays. You can have a great stock that moves like a roller coaster and will keep you up at night, even though the fundamentals look great. So you've got to make sure that you look at both sides of the picture before you make an investment.
Yeah. Charles Rotblut, it's been great having you with us today. Is there anything else you'd like to mention before we go?
The one thing I'd like to point out, I think when anybody looks at our sentiment survey or any other market indicator, I think it's important to realize there isn't just one magic indicator, and to always look for confirmation. If one indicator is suggesting a buy or sell, look at other indicators and see if you're getting the same signal. Just because, as I said, there isn't one magic key. If there was, we'd be doing this podcast from Tahiti.
What do you mean? Aren't we?
Unfortunately, investing's a little bit messy.
Investing's a little bit messy. I like that. I might use that. Okay. Well then, today's guest has been Charles Rotblut of the American Association of Individual Investors, and that wraps up this week's MTA podcast. From SeattleTechnicalAdvisors.com, I'm Ed Carlson, together with our recording engineer, Shane Squark in New York City. Say goodbye, Shane.
So long, everybody.
Yeah, so long, everybody. Let's keep our stops tight. Good day.